The adoption credit is a non-refundable tax credit for qualified adoption expenses paid to adopt an eligible child. Qualified adoption expenses are the reasonable and necessary costs directly related to the legal adoption. This includes adoption fees, court costs, attorney fees, and travel expenses. The exam will try to trick you with non-qualified expenses. For example, the costs of adopting your spouse's child do not qualify, and expenses related to surrogate parenting arrangements are not eligible. Another common trap is any expense reimbursed by an employer under an adoption assistance program. You cannot take a credit for expenses that were paid for by someone else. This brings up the critical difference between the credit and the employer exclusion. Employer-provided adoption assistance is excludable from a taxpayer's income, up to an annual inflation-adjusted limit that is the same as the credit limit. You cannot double dip. If your employer reimburses you for $10,000 in attorney fees, you must exclude that amount from your income. But you cannot also claim a credit for that same $10,000. Both the credit and the exclusion are subject to a modified adjusted gross income phase-out, meaning high-income taxpayers may see the benefit reduced or eliminated. The most heavily tested area is the timing of when you can claim the credit. It depends entirely on whether the adoption is domestic or foreign. For a domestic adoption of a U.S. child, if you pay expenses in a year before the adoption becomes final, you must wait to claim the credit until the tax year following the year of payment. For instance, if you paid $5,000 in 2023 for a domestic adoption that became final in 2024, you would claim that credit on your 2024 tax return. Expenses paid in the year the adoption is finalized or in a later year are claimed in the year of payment. For an international adoption, the rule is much simpler. You cannot claim any credit until the year the adoption becomes final. All expenses, whether paid in prior years or the current year, are aggregated and claimed in that 1 year. A very specific rule you must know for the exam relates to the domestic adoption of a child with special needs. If a U.S. child is determined by a state to have special needs, the taxpayer is automatically deemed to have incurred qualified adoption expenses equal to the maximum credit amount for that year. This applies in the year the adoption becomes final, regardless of whether the taxpayer actually paid any expenses. To keep the timing rules straight, remember this phrase: domestic is delayed, foreign is final. For domestic adoptions, the credit for pre-finalization expenses is delayed to the next year, while for foreign adoptions, everything waits until the adoption is final. Lastly, remember the credit is non-refundable, meaning it can only offset your tax liability to zero. Any unused portion can be carried forward for up to 5 years. This is all calculated and reported on Form 8839.